Welcome to Copy Traders Club, where you can learn how to make more money copy trading. I'm Gavin Macaulay, my name and username on eToro. You can continue the conversation on Discord and Facebook. If you like this podcast and want to see it continue, you can do your part by recommending it to one person or group of people this week. Today, after a series of chats with well-known guests, we talk to a lesser-known PI, one seeking to build up his profile and following, and he comes from the same island as me. Here we go. Episode 37 of Copy Traders Club, and today we welcome an Irish PI called Mark O'Donnell. Quite recently he became a PI, but as we will learn, he has been around for quite a while and has experienced many ups and downs on his eToro journey. Let's hope his limousine ride to the clubhouse was smoother and less dramatic. Mark, Jadich, Falcha Go Copy Traders Club.
Dias Murgwich, thank you for having me.
Well, it's great to have you here and to welcome you in the Gaelic tongue.
Much appreciated.
Well, as you know, you have to answer a series of quick-fire questions to get past reception here at the Copy Traders Clubhouse. You ready for those?
Let's have them.
Username on eToro.
Marco D89.
Date you joined eToro.
27th of October 2016.
Year of birth.
1989.
Place of residence.
Leixlip, Republic of Ireland.
Profession.
Senior Manager of Digital Marketing.
Briefly state what you aim to achieve on eToro.
To build a mid-risk technology-centric portfolio, share my knowledge, and build long-term capital for my copiers and myself.
Name one of your investing heroes.
Warren Buffett.
Name one of your favourite investing books.
Rich Dad, Poor Dad by Robert Kiyosaki.
That completes the formalities. Let's proceed into the VIP section here at the clubhouse. The glorious Copy Traders Lounge awaits you. Mark O'Donnell, aka Mark OD89. Are you ready for this magical transition?
I sure am, Gavin. Let's do it.
Here we are now, Mark, in the fabulous Copy Traders Lounge. A couple of little Irish fellas surrounded by such opulence. How did we get here?
Who knows? I think the love of eToro and, doing the best for the copiers and just the beauty of eToro, I think, brought us here.
Absolutely. Well, let me break with tradition here, just to give the listener a little bit of a summary of who you are, because you're less high profile than many of our guests. Is that okay?
Sounds good, yeah.
Okay, so this is my take, and you can correct me if any of this is way wrong.
Yeah.
You're essentially a crypto guy, but because you want to be a PI and you need to manage risk, you've diversified from your early time into stocks and ETFs. So although you're a long-term eToro user, 2016, I think you said?
Correct.
You're quite early in your PI journey. Is that largely correct?
That is largely correct, yeah.
Okay, well, we'll get into all the nitty-gritty about you as an investor later. But for now, let's get to know the person. Okay, so you're in Leixlip in County Kildare in Ireland, which is a little bit west of Dublin.
Correct. Just outside of Dublin, yeah.
Now, I didn't know much about Leixlip, so I've been researching over the past few days. Here's some fun Leixlip information. Leixlip has always had a strong Viking presence in history. And in fact, the name Leixlip comes from the Norse for salmon leap, lax slaup. Did you know that?
I do know that. There's a wonderful pub called the Salmon Leap in Leixlip. And that very information is on a plaque in there.
I'm supposed to be wowing you with this insight. Okay. How about this then? Leixlip is the location for the first ever Guinness brewery.
That is correct.
You also were aware of this?
I am aware of this. There's many facts that go around. Selbridge, the town next door, is where Arthur Guinness came from, apparently. So they try to claim that Selbridge is the home of Guinness. So the first Guinness was brewed in Leixlip, so we could take some of the plaudits there as well.
Okay, so there's a couple of waterways in Leixlip. The Royal Canal has a huge aqueduct over Rye Water, a former hot spring and Romanesque bath, which is next to Intel's microprocessor factory, which provides more than half of the rateable income of County Kildare. Tell me you didn't know that.
I knew it was a main employer in particularly Leixlip because it takes up probably more than half of the village. So I knew it was a big employer, but not to that extent.
And I had a quick look at your portfolio to see if you were supporting Intel. There's no sign of it.
It's on my watch list.
The first strawberries ever grown in Ireland were grown in Leixlip.
I didn't know that.
Okay, good stuff.
You got me there.
Finally. So tell us a little bit about what you do for Pluralsight. That's the name of the company you currently work for. Pluralsight, let me give a bit of background here, is an American privately held online education company that offers a variety of video training courses for software developers, IT administrators, and creative professionals through its website. Pluralsight, the tech workforce development company.
Exactly. Yeah, so I work in the digital marketing department for the European offices. My role is predominantly to create demand and build brand around Pluralsight within the EMEA area, particularly to drive pipeline to the sales team and ultimately billings for the sales team. So my particular role leads very much into the stocks, particularly that I look to invest in. We focus a lot on blockchain and enabling blockchain development companies to onboard and upskill their staff. So it very much ties in with my investing style on the technology side. But in my current role, it's very much building campaigns that create pipeline for the business.
Very good. Let's talk about how I came across you. I think you emailed me, didn't you, early on in the podcast history?
That is correct. I really enjoyed some of the early episodes you ran earlier on in the year. And I asked myself the question, could I see myself on that podcast one day? And so being a little bit ballsy, I decided to reach out to Gavin to see was there any potential opportunities to be on the podcast. Gavin said that he would come back to me in time. And a month ago or thereabouts, I got a tweet from Gavin to ask if I'd be interested. And I absolutely was interested. And here I am today.
Well, it's nice for me to mix it up a bit, as a kind of accident of scheduling. The last 5 or 6 interviewees in terms of PIs have all been pretty high profile, black stars and big names. But I'm more than happy to mix it up and hear from people who are maybe earlier on in their eToro journey or earlier on in their PI journey or are coming at it from a different angle, because it's a very, it's a broad church, eToro. Everyone else seems to focus on the big names. So, I'm swimming upstream like the salmon of Leixlip to some extent.
That was a lovely tie-in to my residence, but that's exactly the way that I see it too. To be associated with some of the names that you've had on the podcast is, from my own perspective, is amazing opportunity. My assets under management and the amount of copiers I have is quite small compared to some of these guys, but I do put in a lot of work into what I do, and I think my performance is quite strong for what I do, and I am always learning, and I continue to learn every day. So having these opportunities, is something that I really appreciate.
Well, I think you're doing a lot of things right, and you're a name that could rise up the rankings, quite possibly. So let's see if we can help you along the way.
Sounds good. Thank you.
Well, we'll do that by getting to know you, your strengths, your weaknesses, which is another seamless segue into the next question. Tell us something you're very bad at.
So for me, freehand drawing was always a hard part for me, which in one way, my very first job out of university was a graphic designer. So I had the help of Adobe Illustrator and Photoshop to mask the fact that I couldn't draw with my hand. And at that stage, it paid my bills and it got me to where I am today in digital marketing. So freehand drawing is certainly a bad skill of mine.
Well, that's interesting. For most people, freehand drawing wouldn't be something they would think twice about being rubbish at. But interesting that you mentioned Adobe there. That might explain some of your biases, which we will address later in the chat.
That's good.
Okay, let's have a question from the art of people. Can you pick a number between 1 and 10?
7.
If you weren't doing what you're doing today, what would you be doing and why?
I would love to be a PI full-time and spending a lot of time creating content, working with my copiers on a full-time basis. With that in mind, I'm doing that very much as a part-time role at the moment. But if I didn't have to go to Pluralsight every day, that's something that I would love to do. And a lot more public speaking, a lot more workshops, and really being innovative with my approach. I think in the future, I would love to get to that position, but that's what I would do if I wasn't working at Pluralsight today.
Do you do much in the way of public speaking these days?
I do some public speaking through work, a lot of presentations. I've done, a bit of work outside on, speaking at some events, but I've also spoken. I've done guest lectures for digital marketing at my previous university in Edinburgh. I've done 2 modules there in the past as well, marketing particularly.
And when you public speak, it's about digital marketing and blockchain. Those are your areas of expertise.
Yeah, it's mainly been digital marketing and technology. In my own YouTube series, I do touch on, the crypto side of things and the blockchain side of things, but that's very much my own content. It's not that I've been asked to speak on blockchain just yet. Hopefully those opportunities will arise in time. But yeah, it's mainly my own content and then digital marketing through my career.
At this juncture, Mark, it's time to have a little look at your bio. Before we do, can I say it's a beautifully laid out bio, very neat, very good use of icons. It's a bit long, so let's just deal with the first 3 paragraphs first of all, and then we can talk about those.
Sounds good. So my overall strategy, I suppose, focus on crypto, equities, and ETFs. Just a little bit more on my strategy. It's mainly around the tech component of equities, blockchain, mainly growth stocks, high growth stocks. I do look to balance out the high risk assets with some value stocks and ETFs also. I primarily base my research on fundamental and tech analysis. However, I'm open to other areas such as macro, which also feeds in. My experience to date, I've been full-time in marketing, digital marketing for about 10 years to this stage. I've been investing 5 years, initially got into crypto and diversified then into equities. I also have exposure to P2P finance, where I'm an investor in a company called Linked Finance. It's an Irish company.
Okay, well, that paints a picture. In order to flesh it out a bit more, let's just have a quick look at your stats over the years, because I want the listener to understand really what we're talking about here. 2021, year to date, you're almost 70%. 2020, almost 190%. 2019, 52%. So if we just stop looking there, those are incredible numbers. The way eToro works, you would think that you should have far more copiers than you do. We'll come on to that later. Your copiers are currently 74. Possibly some of the reason for that, which again we'll discuss later, is 2018 was an annus horribilis, almost 80% down. And that was preceded by maybe the early year of 2017, which was 1,312%. So, in a nutshell, you're at heart a crypto guy. The historical picture is one of up and down, big numbers, big winning months in various places. Let me just have a look at that. Saw some ridiculous winning months.
May 2017, 200%.
Yeah.
That's leverage and everything, though.
Okay. So when did you become a PI?
I became a PI this year. I think it was January or February of this year I became a PI.
So if we could erase everything from before January 2019, you'd probably have 10,000 copiers.
Yeah, possibly.
But we cannot erase history.
And that's cool. Like, I mean, I could tell a story about my performance. I'm happy to address the 80% drawdown. That's part of who I am. History speaks for itself.
Sure. Well, let's talk about that then. Tell us your story rather than me trying to interpret it. You just give us a quick overview of your history on eToro and how you got to where you are.
So I started out in 2016 on eToro, mainly to get exposed to cryptocurrency. I had done a master's in business information technology 2014, where I actually wanted to focus on cryptocurrency and blockchain as a dissertation, but there wasn't that literature to build a literature review and to have depth in the subject. But my interest was always there. So from my side, I wasn't around when the internet bubble happened. So I always said to myself, if something came along, like a revolutionary technology came along, I was getting some skin in the game. 2016 happened. Bitcoin was about $500 at the time. And in my head, I was looking at Bitcoin from sort of like 100 to 200. So I was like, this is my time to put some dollars down. So I started with about $500, and 2017 happened. The hype train came, the mania came. I was very early in my trading career. I used some leverage. My March, April, May performance speaks for itself. 2017, some insane months, reckless even. My risk score at the time was probably 8, maybe touching 9. But from there, I never even thought of becoming an investor or even a popular investor or joined the program at that stage. That was so far from where I was. I know that year ended off just over 1,300%, which in anyone's book is insane. But then obviously what I wasn't prepared for was an inevitable crash of the bubble, which happened in gracious form in 2018 with an almost an 80% drawdown. And that was, from my side, I was holding my assets. I've done so much research into it that I knew that it was only a matter of time before things would turn around. And I knew that it would take time. It could take 2 to 3 years. And it sort of played out that way. If you look at 2019, I diversified a little bit into some stocks just to stabilize the portfolio a little bit. But it wasn't really until 2020 where COVID happened. And I think Bitcoin and crypto at that time was making a good recovery overall. And there was some bargain basement prices. I picked up some Bitcoin positions at about 5 to 6K in 2020. And I've held many of those since. And that's what really gave me a springboard to get back into building more confidence around my investing, diversifying into more ETFs, always having a cash balance. I learned my lessons the hard way by seeing 80% drawdowns in my years, which was very, very tough. But again, I was happy to hold. I tried to always have a long-term perspective. Some months are red. Most months in my history are green, which is great. Most years are green. And that's the way I kind of think about it today. And right now where we have my risk score is about 5. I was down to 4 last month. I always manage to hold cash on hand for opportunities to ease drawdown, particularly trading cryptocurrency, which can be very volatile. But I think, my performance over the last 5 years tells its own story in how I've developed. I have done lots of learning and lots of podcasts, read lots of books on investing. And, that sort of seems to be reflected in my performance today.
Okay, so let's talk about your copier numbers. As I say, you've only got 74 copiers, which you describe yourself as relatively modest. It must be a combination of they see that huge down year. They see your drawdowns pretty heavy. They see big up months and big down months. So you're not for the faint of heart.
That's a fair enough point. I think with anybody who is a majority or at least a heavy minority in crypto, you've got to expect that there will be some drawdown in the short term. But over the long term, you look at the performance of cryptocurrency over the last, 10 to 11 years, and it's on average, it's a 200% yearly growth. Now, as you mentioned, that volatility is not for everybody, and that is completely fine. However, at the moment, I'm between a risk 4 and 5, of which many PIs are. So what I would say is that if you want a portfolio with exposure to crypto, with a bit of balance with some of our value stocks and cash, have a look at my portfolio if that's something that interests you.
An uncharitable view might be that you keep 20 to 40% cash on hand, something like that, simply to keep the risk score down?
Not necessarily. It's part of it. However, as I demonstrated, say, in September, I went in September with about a 38, 39% cash balance. And with my majority, in crypto, I was able to buy a number of positions at a discount to where they were in the past and a discount from all-time high. I wouldn't have been able to do this in a risk-balanced way if I had less cash on hand. That does feed into where my strategy talks about cash, is that it's having the opportunity to buy opportunities, to add to existing opportunities when the opportunities present themselves.
Okay, so you're very much not a newbie. You've been on eToro since 2016, so you're quite a long-termer. But it feels like your journey as a PI is a completely different one from the likes of Hugo Menenti or Robert Merck, who signed up last year and are already nearing the summit. What PIs do you sort of look to as peers?
One of the PIs that I suppose has a very similar portfolio to myself would be Bees84, Stephen Budgen. I've spoken to Stephen a few times on Twitter, on YouTube, and on eToro, back and forth. He's got quite a similar setup portfolio to myself, and is quite crypto heavy. He's got a YouTube presence as well. He's obviously a bit larger than I am, but he'd share a lot of the values, I suppose, and a lot of strategies that I also implement.
Do you own a ton of crypto personally outside of your PI portfolio on eToro? Is that where your conviction lies?
I have about 90% of my crypto off eToro.
So you're heavily convinced in the future of crypto, but as a PI, there are various other factors to take into consideration. So you've got to measure it all up.
with the crypto I have off eToro, it's very much accumulation, and I'm happy. The drawdowns are cool. You know what I mean? So like if you look at the 2017, 2018 performance, that's basically just holding what I had. So if you looked at my wallet, it's exactly like that. I'm kind of bought in from that perspective. But on eToro, what I try to get across is that, like, while I am bullish, I'm also trying to look at it from both sides, and there is both sides. And I think the way I try to position it all the time is that this is the reasons why I buy it. However, it is a risky asset. There is parts to it that traditional finance people mightn't agree with, and that's fine. I'm all for discussion and all for as balanced a view as possible. I try to do that as much as I can on eToro without being too biased. And maybe I can be slightly biased, but I do try to see the other side as well.
I suppose what you would say is you don't consider it a risky asset because you're in it for the long game, and in the long game you think it's only going one way. But for copiers who play a lot shorter of a game, unless they've got the stomach to be wed to you for the next 10 years, then it is much more of a risk.
It is possibly, and to kind of mitigate that, what I generally will do is I will trim most of my positions. Once there's a short-term pump, I'll close out those positions, and once there's a dip, I'll buy into positions. So I do trade a lot more on eToro. I don't trade like this off eToro, and that has enabled me to balance out, the gains and the drawdowns. So it's a lot more steady. The way I was positioning it to some of my copiers in the past was I was comparing my performance overall versus Bitcoin, and I was just giving them, and the Nasdaq as well, by the way. So what I was saying is, look, this is where my assets lie, and this is how my performance compares against, we'll say, Bitcoin. So Bitcoin obviously was like, this year was like this, and then it fell. But the way I was showing is that, like, my portfolio was not the same growth as Bitcoin, but it wasn't the same drawdown as Bitcoin. It was just a nice median kind of a line. Mm-hmm. And that's the difference of how I operate in eToro, because I'm managing other people's money. So I need to take that into consideration as much as, my, I suppose, due diligence to them, and to try and get the best return for them over time. And as you mentioned, some people will only kind of hang around for a few months or a few weeks in cases. But I have had some people who have been with me from the very start as well. So it's a mixed bag, but I do try to do this to, as best, capitalize on the trends, but also try to protect capital as best as possible with a volatile asset.
Okay, looking at your copier graph, there was a very steep rise to what I'm guessing was around 60 something copiers, and then a decline. Now, the decline was because you were copy blocked, correct?
I was copy blocked, yeah, correct.
Okay, so tell us about why that happened, how you felt about it, and how you resolved to make sure that never happens again.
Sure. So I was copy blocked around the time of one of the major crypto crashes, which was back in May. It also coincided with a drop in the S&P and Nasdaq, of which I had exposure to as well. This tipped me into risk 7, which is, as many people know, a cardinal sin on eToro, which doesn't take into consideration the long-term view. What also I was doing was, particularly with the equities in my portfolio, I was adding to some really, really strong positions. That was seen as possibly a risky activity because those stocks kept on dropping, which only added to the daily and then the weekly drawdown. So that one particular 3 or 4 days blocked me for 2 months. And that was very, very painful, because if you see, my copier graph, I was riding a nice momentum curve, and that just took the wind out of my sails completely. And I had people who were trying to copy me during that time and asking when I'd be unblocked. And as you can see on my graph, there's a small incline after, but majority of that momentum had been taken away. In that time, I had set up my YouTube channel. I continued to speak to everybody. I could continue to put measures in place for myself that I'd never have to go through that again.
What measures are those?
Yeah, one of the measures that I particularly took was ensuring that there was always a cash balance. One reason for this, is to be able to have that low risk asset on the books. Whatever way you look at it, cash is an asset. It can be used to allocate to new positions. It can be used to maintain the risk of a portfolio, with also looking at the amount of my portfolio that was in the likes of high growth tech stocks and also crypto. That had a huge impact on the risk score overall. But then also looking at some of the measures around when to take profit, when to cut losses as well. One of the parts that I added to my strategy was that it's okay to take a loss, but knowing when to take a loss is what is tough when people are happy just to let a loss go with the idea in time that will come back and it will be a gain. And I've been a casualty of this in 2017, 2018, where I was happy to wait. But that does not work if you are managing in the current or in the medium term, where if you took a small loss, it's much more of that opportunity cost. You're holding a position that's going to be red for quite a while. These kind of measures have helped me keep my reduced risk score to it's usually between 4 and 6. On average, it's about 5 the last 2 or 3 months. So I would keep that mid risk to be able to have exposure to the upside while also being able to reduce the exposure to the downside.
Since the copy block was lifted, you've been on a nice growth trajectory, and now you're at your highest point in copiers currently. And as you say, you're maintaining a much more acceptable risk score. So those two elements of your bio look good. I mentioned drawdown earlier. Let me just give you the numbers here as they currently are. Daily max drawdown, 14.86%. Weekly, 18.25%. And yearly, 24.44%. So those are pretty substantial numbers. Anything you want to say about those?
Yeah, so, the 14 and the 18% are particularly in line with the time that my risk score went to 7, where I had many assets that were all susceptible to a drawdown at the one time. That really impacted, risk, daily and weekly drawdown.
What you're looking at is, if we can jump forward to a time in the future, say middle of next year, when some of these 12-month rolling stats are sort of wiped, and your risk score, if you can maintain it, you're going to look a considerably more attractive proposition to the average copier, right?
Yeah, I'd say so. Yeah.
Okay, let's look at trades per week and average holding time. Trades per week, 14.37. Average holding time, 2.5 months. What do those stats tell us?
So with, a majority of my positions are in crypto, and with the volatility and the recent volatility, I've had to jump in and jump out of positions, particularly taking small gains, but also cutting some of the positions which are susceptible to a lot of downside. That's where the volume has come from. In the past, it has been more. If you look at some of the positions in my portfolio, some of my value stocks I've had for over a year. I've had some Bitcoin positions open since March 2020. So there is some long-term positions there. if you look at my strategy, where I do have, 15% of my trades are short to medium term, that's what probably brings that average down a little bit. The trades per week is pretty much around the crypto side of things. I tend to not jump in and jump out of too many long-term equity positions. But yeah, it's very much based on the kind of crypto strategy. Is the higher numbers and the trades per week, and then that lower holding time.
Okay, let's shift gears a little bit and talk about communication. Your YouTube channel is called Mark OD89 Investing. You were born in 89?
That's correct, yes.
So it's quite early days in your YouTube career. It's fair to say there's not that many videos. If I could sort of paint a picture of your videos, it's much like what I'm looking at currently, even though, of course, we're in the Copy Traders Lounge. But your YouTube videos are, you're in a bedroom with like a sofa bed behind you. It's not always perfectly made. That would be one point I would suggest. Make sure it's nice and neat.
That's my office, yeah. My office / bedroom.
Have you got wooden floors?
I do have wooden floors, yep.
I think you could do more to soften the reverb of the room. Get a few carpets in there, rugs and blankets and things like that might help with your audio. But I was wondering, you're a guy who comes from the world of digital marketing. I would have thought that your YouTube videos would have started off a bit more slick than the average person's because of the world you come from. It's fair enough for the average Joe to start off doing really simple videos, and little by little, everybody learns. You have to be a disaster before you can be a master. When I saw that you had YouTube videos, I was thinking, oh, these are going to be the videos of a digital marketer, or the great intro and music and pizzazz. Is it just time constraints that have stopped you from doing that?
Yeah, it is, to be honest. I do have plans to create a proper brand around my videos and create a bit more of a production value. My thing very much, and this does relate to the way that I work anyways, is that I would rather get something out there that is not complete to get feedback and to get some consistency going. Understand, is there a requirement and is there a demand for the video production and for the overviews that I do? With then in the future to say, yeah, okay, I'm happy to invest more money and time in getting these up to a better standard. But from my side, I've had some good feedback on some of my videos from my copiers. I've had some comments. I've about 30 subscribers at the moment. So for me, it's a good start, and it does justify that I could certainly do more. To build a brand and to build a proper online presence is a lot of time, and I would love to have more time right now to be able to do that. But unfortunately, commitments.
Well, you're absolutely right. Don't let the perfect be the enemy of the good. And I can understand why your copiers appreciate them, because they're hearing from you direct. You're talking to them. You're answering their queries. You're reaffirming all the things they need to hear. I'm thinking more in terms of the casual viewer who's like, oh, who's this guy? That's where the production values, I think, yield better returns.
Yeah, I think that's completely fair. But one of my things, I suppose, and this is something that will evolve over time, is that I don't try to be anything more than I am right at this moment in time. I am a small fish in a large pond right now, but that's not the same case forever. And particularly with my YouTube videos, they are informal by design. From my side, I'll go, okay, it's time to do an update, and I'll throw on the camera and I'll start speaking. It's literally that informal. And for me, I like to be as real as possible and as approachable as possible. And maybe that works for some people, maybe not for others, but I do want to evolve that in time, but for now, I'm happy enough with how it is, but it certainly can improve. There's no doubt there.
No, that's fair enough. Keeping it real is the way forward,
Yeah.
I'm not suggesting you wear a pink suit and jump up and down, You got to be yourself. People will see through the nonsense if there's nonsense.
100%.
So you're talking about how you're going to progress in time and build things up. One of your videos is called 5 Tips to Build Your Copier Base. Number 1, newsfeed activity, e.g. answering questions. Position yourself as someone who has knowledge. Okay. Number 2, reach out to your followers. Ask them what they want to achieve. I like that. Number 3, share your insights or analysis, i.e. showcase your individual talents. Number 4, focus on your profile. We've already talked about how your profile is very well laid out. Looks good to me. Number 5, a little bit what you just mentioned. Don't sell to people. Don't plead with them to copy you or try and convince them that now is the time because next week you're going to the moon. Just let them decide if you are for them. Present yourself and let them make that their decision.
Exactly. And with that particular video, I wrote that in the mind of, this is what has worked for me. This is what has worked for me to build my copier base to where it is at the moment. I'm sure there's many of other tips that people have used in the past, but these are the ones that I actively work on, almost every day.
Yeah, I think you're making so many of the right noises about being a PI, I've spoken to guys who want to join eToro. They're different kind of investors from you. But, I give them the benefit of my limited knowledge. And we're talking about a lot of the same points here.
Yeah.
So there's every reason to believe that Mark OD89 could be more of a name in the future. But, results speak volumes, of course. But as I say, if time passes, some of those drawdown figures improve, 2017 becomes more and more of a distant memory, then it could be blue skies.
That's it. And, from my side as well, I know that I'm not the perfect cup of tea for everybody in how I operate and how I invest. But for me, it was like, this is how I'm going to do it from when I started out with. And I'm going to tell people about what I do and how I do it. And if that's something that people are interested in, join me. And if not, no problems. I think everyone who invests on eToro and who particularly, joins PIs, they have that choice. They have that power. There's no gun to anybody's head. You can see my stats. You can reach out to me on YouTube. You can reach out to me on Twitter on eToro, and that's kind of how I've done it so far. Yeah, it's been an interesting journey. I've had fun so far, and I know myself that there's a lot of potential there for myself to excel in many areas, to become a better investor, to put out better communication. In my opinion, that's all ahead.
Dear listener, just a little pause here to say a few things directly to you. The calendar is full until the end of the year. That will mean 52 episodes, which seems like a good time to pause and call it Season 1 and take stock. It's been a lot of fun and a lot of time and effort, but I'm pleased to be creating something of value for eToro users, particularly copy traders. Whether there will be a Season 2 depends on a number of factors. I say it elsewhere, but I want to repeat it again here to really encourage a little action from you. If you want to see the podcast continue, you can help by bringing more listeners in. A lot of people still don't know about Copy Traders Club, so post about it on your PI's feed in eToro. Mention it on a Facebook group or in whatever Discord groups you're in. That's not too much of an ask, is it? On the podcast apps, there's always a share function that includes copy link. Use that. Or copy the YouTube channel link and share that. Or share a link to your favourite episode. There are many ways to eat an orange. I also have one of those affiliate links for new eToro sign-ups in every episode's show notes. So, if you know someone interested in signing up, please copy and send them that link and help support the show that way. Now, I know these calls to action that you hear on podcasts can easily be ignored, and I always ignore them myself, let's be honest. But this time, I am asking you, as someone who listens to and enjoys this one-person independent podcast, to make a little effort to help it along. You can even press pause and take 2 minutes to do it right now. If you do, know that I am grateful. If you don't, every time you hear this bit, you will be overcome with a crippling sense of guilt and unworthiness. Until you do. Back to the show. Okay, Mark, let's have a little look at your portfolio. Let's start with the asset classes. Stocks 45.5%, crypto 44%, ETFs 10%. And that is relative to the invested portion of your account. You've also got currently 20% in cash.
Yep.
Top 5 positions are BABA, Bitcoin, Litecoin, UVXY, and Ethereum. So if those are numbers 1, 2, 3, 4, and 5 in your invested column, in the value column, the top 5 would be 2, 5, 1, 4, 3, which suggests there's not much of a problem with desync. Although if I look at the actual positions, Bitcoin is up 52%, Ethereum up 40%, BABA down 35%, Litecoin down 28% at the time I recorded these numbers. So again, it's more big numbers. Everywhere I look in Mark OD 89, the numbers are big, one way or another.
Yeah, that's a fair point. What I would also look at is with my top 5 positions, they're all relatively volatile in their nature. Obviously, Bitcoin, Litecoin, Ethereum have, in the recent days, as of the time of recording, have started to kick off again. You know, and I have bought positions throughout September with this in mind. Obviously, with BABA, it's fundamentally a very, very strong asset. But there's the macro environment in China, regulation, that sees it very, very undervalued at the moment. And it's one that I am quite overexposed to, probably. However, I see amazing potential for BABA in the future. And that's why it's a large position of mine. That's why it's still there.
So you're not tempted to do a Charlie Munger and double down at today's price?
To be honest, I have added positions throughout the last few months. I may add more. I will see. You know, it's 7% of my open positions at the moment. So, you know, we have to also take some risk into account. Obviously, being exposed to crypto, that brings its own risk profile. I also have, you know, if I look at my 4th largest position, UVXY, this is a hedge against the S&P at the moment. The S&P has gone through quite a volatile few months. And this is particularly to hedge against the movement of that. Having such a large holding in S&P and NASDAQ companies, it's due diligence to also consider the downside. So that's kind of explaining some of my positions.
And how long do you hold these volatility instruments for?
Not too long. So I have in the past probably 2 to 3 days around times of volatility. Most of my positions I've closed out in them have been in the green.
That's good to hear, because I had Marco Willikins on. I don't know if you heard that episode, Elite Vol. And he tells me to look out for these instruments in PI portfolios. And he said he sees all the time that people have held on to these for months and years, and they're always heavily down.
Yeah.
Because people don't appreciate that they have to be traded quickly. They're not meant to be held on to because of the decay factor.
Exactly.
And I've been playing this game ever since he told me that, where I see that in people's portfolios and I look across and it's down 45% or 70%. And then I check how long they've held it for, and the answer is ages. So I'm glad to hear you don't hold it for long.
No, and even in this particular position, well, it's down 7.9% at the moment. Yesterday it was up 3%. So it is volatile, but it is very much a hedge against, the volatility in the market. And yes, from my perspective, I will hold this no more than a few days. And I will close it in the red if needs be, because it can go further south.
Up to half of your portfolio is in cryptos. We talked before, it sounds to me like cryptos are your first love. Let's talk a bit about your approach to cryptos. What determines which assets you're interested in and which you're not?
So a few factors that I would look into. I would look first of all at the longevity of the assets. So for me, we'll say Bitcoin, Litecoin, and Ethereum. You'll see that they are my larger positions. They have been around since very early on in the crypto tenure overall. They have stood, the test of time. They've added fundamentally more technology. They've gained more exposure. They've gained more users, more use cases along the way. I look at very much longevity, use cases, applications, and then, the amount of users that particularly have value in these assets. Lots of altcoins going on with some huge potential, but I think to include some of these altcoins to a large extent in the portfolio could be very, very risky, because I think people see like the likes of Dogecoin, say, for instance. I never plan to invest in Dogecoin, but I see people who do, and they get 50% up in a day or whatever it might be. That's just too volatile for me when I try to balance a portfolio. That's kind of the main points.
Let's talk about some individual positions. Now, let's do a callback to what you mentioned before when it came to your drawing skills. You said your inability to draw freehand was overcome by the use of Adobe products. Adobe. You bought a couple of tranches in the 400s in January, after which it rose quite impressively, going above 600, where you bought 3 more tranches. In fact, more than trebling your holding up around those prices. And since then, it's dropped back into the 500s. So you're currently down on it. Now, a bear might say, everyone knows Adobe's a great business. The subscription model and the way of the future and well-managed company. The employees love working for it. But is it good value? The latest earnings reports show 20 to 30% growth on a year-over-year basis. Fantastic growth. But going forward, the PE is twice the value of its earnings growth, which sounds like growth, but not at a reasonable price. Would such a bear give you pause?
I believe they have valid points for having a bearish outlook. The way that I would value Adobe, and I've touched on the fundamentals and the technicals in the past. I look at the technology and innovation behind this company and the products. I use Adobe on a daily basis still, and the products are strong. The technology is always cutting edge. They are consistently bringing on users and engage users. So, people who are in technology stocks know that this is one particular area that we look at when we're valuing these companies. And I believe that they have a good vision for the future. So this is a reason why I'm particularly vested in Adobe. From one side as well, I work in Pluralsight, which is a very, very similar company and how it's set up. So I understand the numbers inside the business, which drives value. And that's really a particular reason of mine that I'm so focused on Adobe, particularly in the long term.
So you think it is a reasonable price?
I still think it is a reasonable price at this moment.
Okay, maybe now is a good time for me to ask you the interview classic. Tell us about your best and worst investments.
My best investment was buying Bitcoin at $500, of which I still hold in my wallet outside of eToro. As I mentioned at the time, I wanted to get into an early technology. I wasn't alive around the time of the dot-com era. And at the time, Bitcoin was that. I put a small amount of money. There was always the risk that it would go down. But long term, I did have faith behind it. And I'm still holding that position now. So that's probably my best one.
Have you cashed in much of your personal crypto?
I cashed in a little bit in 2017 before the main crash. I bought my wife an engagement ring with it, but majority I still hold. I would say probably 80 to 90% is still sitting in my wallet, and I have added to that.
And do you still hold her?
I still hold her, and we have a baby together.
Oh, well, there's proof that you're still holding.
Yeah, exactly. There you go. My worst to date. I opened a position with a company called Vaxart this year. It sort of came around the time of the meme stock mania. Looking back, I sort of was like, okay, 0.5% of my portfolio, I'll have a little punt here. This is before I think this is before I was a PI anyways. And it went up maybe 30 or 40% in a day. And I held on. I was like, okay, that's fair enough. We'll see how this goes. And then it crashed the next day. And it reduced. I think it drew down quite a large amount. I cashed out with a slight loss. But the reason for me that it was a bad decision is that I moved away from my fundamentals and I got caught like a deer in the headlights with some easy gains, which I should know better. But that was a few months ago, and since then, I have done my best to not get myself in these positions. But I think that's probably my worst investment decision.
Well, let's talk about that a little, because you mentioned Warren Buffett as your hero. You talked about how you've moved into value stocks, and stocks do take up half your portfolio. Looking at your portfolio today, can you list some of the stocks you would consider to be safer value kind of stocks?
Sure. So looking at my portfolio, stocks like Disney, Berkshire Hathaway obviously is Warren's baby. I would look at Pepsi Cola being a value stock, dividend paying, low growth. Volkswagen, General Motors would be a value stock of mine. Visa.
Aviva
would be, that could fall in there. I do have some UK stock exposure there. So if you look there at those, they could fall under value stocks as they are generally modest growth, dividend paying stocks.
And then those are mixed in with some more out the risk curve positions. There's a couple of cruise companies in there.
Yep.
Lemonade. These are small positions, though.
Exactly, yeah. So this is like a part of the value stocks to, you could look at the likes of Carnival Corp that could technically fall under, Royal Caribbean could technically fall under asset heavy, slow growth companies. I looked at those positions around the time that travel started ramping up after COVID. Again, these are long-term holds for me. I'm happy to play the waiting game, the long game with these. And I suppose that's why they're such a small portion of my portfolio as well.
Okay, let's move on to copiers. This will be interesting. What kind of people should copy you?
I think people who have some appetite for risk.
Some appetite? Or
some appetite.
A stomach of titanium?
Possibly. What I would say for people who are looking to copy my activity, I primarily focus mainly around cryptocurrency and tech. That's where my main experience and knowledge lies. These high growth, new tech, a lot of it is still experimental, and that's why I understand there's high risk there. But I think for anybody looking to have some exposure to these areas, I work in the industries. I research every day. It's an area that I will manage my fund as best as I can with that knowledge. So if you want exposure to something along those lines, that's slightly, it's not the perfect portfolio if you look at, fundamentals of investing and, safe and low volatility, slightly left of that. I would suggest to anyone who wants something a little bit different, a little bit more future thinking in that way, that's who I would kind of recommend to consider me, at least.
And who would you tell to not consider you?
I don't do any commodities or currency pair trading. I generally will hold a small amount of value stocks, but I won't hold a large amount. Anyone who values drawdown very, very highly, if that's something really important to you, one of the prerequisites of my portfolio is that there will be some drawdown because of the volatility of the assets that I trade.
Do you think that's getting smaller as time goes on? Is that your plan, is to sort of
Sure is.
Smooth that all out?
Yeah, I think particularly around the yearly, I had a large drawdown in 2018, as you can see from the stats. And I think that yearly average particularly has carried itself along. I've had green years since then. But if I look at the monthly, say, for instance, and the daily, that's something that I actively try to reduce over time. And I have reduced over time, and I can still get better. Absolutely.
Yeah, you're definitely not for somebody who wants all green months.
Yeah, definitely not.
So for those who do copy you, what do you suggest is the right way to go about that and the wrong way to go about that?
So for people who are looking to copy me, I would suggest having at least a year plus in terms of the length of time that you stay with me. You will see from my portfolio performance, there are some red months along there. I can't guarantee there won't be more in the future. There probably will be. But over time, the assets in which I invest in and I put my time into researching pay off in the long term. And that's how I manage my portfolio. And that's what I would advise to people who are looking to copy me, to have that view, have that long-term view. And I will do my best to inform you of every position that I take, every position that I close throughout my updates on YouTube and on eToro. That's what I would say to someone.
Okay, when considering a new copier, it's easy to make the mistake of thinking that the copier is investing in you and only you, which is very seldom the case. So, Next question. What role should you as a PI play in a copier portfolio? And can you describe what you think the ideal portfolio would look like?
So as part of your portfolio, if you were looking to have exposure to cryptocurrency, high growth technology, and some balance in value ETFs, that's where I consider me. That's where I spend most of my time. That's where my experience and knowledge lies. So I would provide that part to a already balanced portfolio.
What sort of PIs do you think a copier might have alongside you in their portfolio?
Depending on the weighting of how much someone would allocate to my fund, I would probably recommend looking at probably a more lower risk and possibly someone who focuses more on value stocks as a majority of their portfolio, just to give you some balance. That's probably what I'd say.
Do you have any people who copy you and only you?
Yes, so there is. There is one person here who has 98% of their fund with me.
Wonder what he does with the other 2%?
I'd love to know. Hopefully a cash balance. That would be good practice.
Dogecoin, I suspect.
Possibly.
And there are other sort of high conviction copiers in your dashboard that you see?
There is, yeah. So we've got a few. I've got an 82% here, an 86%, and I've got a 74%. So yeah, there's some that have a high exposure to me as an investment, I suppose.
But for the most part, you're one of the multiple PIs in a portfolio.
For most part, yeah, that's a fair statement.
Speaking of other PIs, you mentioned Stephen Budgeon earlier. Is he the PI you would say you know best on a personal level?
I would say probably yes. I don't know him very well at all, but out of all PIs, I probably know him the most, and I think we've had most interaction throughout posts and through other social media channels as well.
Yeah, he's a very helpful, friendly guy.
Absolutely.
And that's very much his angle as a PI. He's very focused on being there for his copiers. A lot of PIs say that, but you really see it with him.
Absolutely. I have had interactions with him where he's given me some advice along the way, or he's answered questions to me when I was earlier in my journey. So I completely agree with your synopsis of Stephen, and hopefully someday I'll get to have a conversation with him.
But you've never met any PIs face to face then, thanks to the Miley Cyrus?
No, unfortunately, I haven't. Hopefully one day we'll get to meet some people in person for some good discussion and conversations.
One thought that crossed my mind is that you're in about the right place in your PI journey for being considered for something like Editor's Choice. But knowing what I know about Editor's Choice, that's not going to happen. Your returns historically are too high. Your drawdowns are too high. They very much seem to favour safer bets, steady ships, very low volatility individuals. So you're going to have to do all the work yourself. It's all going to have to be organic growth.
Exactly.
You know this?
Yeah. No, that's a very fair point. And I certainly think the Editor's Choice page does give great exposure to people. But I suppose from my side, some of the gains that I've had and some of the losses I've had in the past years, I can understand it from their perspective. However, in recent times, my portfolio performance is much more balanced. My drawdowns are less severe, even though some of them are still quite high. But from my side, I'm happy to continue my own brand building, my own awareness. I'm a marketer by trade. I get how this works. I will continue with my YouTube videos, my communication, and my one-to-one communication I have with many of my copiers and followers. And yes, while I might be up against the challenge that some people may not have to face, I think everybody has their own journey here. You know, I think some people, they might have the luxury of being on Editor's Choice or being featured, but there might be other parts that they might need to work on, or that they may not be so comfortable with. So look, we'll take it as a challenge, and we'll face it head on and keep going.
Final question, Mark. If you were in my shoes, what question would you have liked to ask yourself that I didn't?
So maybe something like, so you mentioned earlier in the show that I would be probably one of the lesser known PIs. So I suppose the question I would ask would be like, what do you expect to get out of this show?
And your answer would be?
And my answer would be, is the way I look at it, I'm a digital marketer and I'm a brand marketer by trade. And I get how these activities work. The people that are looking to copy me, they mightn't be here today. But the way I look at it is that I need to get to know people. I need to get in the same realm as some of these more known PIs. And to even be considered in the point that you might know this guy, but here he is. That to me that's a good start. And from my side, I'm going to continue to do my updates on YouTube. I'm going to continue to do my updates on eToro, speak to my copiers, and I suppose be as good as an investor that I can be. And there's still more to do there. There's still more improvements to do. But, you know, I think this is one of the steps that I really wanted to take. And I'm happy now to have had this conversation, and let's see what happens in the future. If I even get to be added onto a few more watch lists even today, that to me is a good step, because what I would ask of people then is, am I true to my word? You know, if I'm saying today what my goals are, will they play through in the coming weeks or months? And then, you know, people who add me to their watch list may then decide to copy my activity. And that will be in their hands.
Well, Mark, that's all good stuff. I hope the listener enjoyed the introduction to you today as much as I did. And I look forward to seeing how you progress. I have a suspicion that, as I mentioned earlier, you'll be a significantly bigger name this time next year. So the best of luck to you. Thanks for coming.
Thanks again, Gavin. Really enjoyed the opportunity to be on the show, and hope to see you again in the future.
Good man, Mark OD 89. All the best.
Thanks, Gavin.
It was interesting to talk to Mark about his eToro experience and his fledgling PI career. He's doing a lot of things right. If you're the kind of copier who can handle the volatility and stomach the risk, then copying Mark or PIs like him can be a lucrative venture. As long as they are reliable stewards of your cash, it might not be a bad idea. You can make more in a month or two than some high-profile PIs make in multiple years. It seems crazy. That's all from me. You can continue the conversation on Discord and Facebook. If you like this podcast and want to see it continue, you can do your part by recommending it to one person or group of people this week. Until next time we meet at Copy Traders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., etc., and so forth.